The San Diego real estate market is cooling. I am Woody Henderson, and this is our July 2022 San Diego housing market update. Today, we're going to talk about metrics, the economy, the market, and answer the question, should I buy a home now? Key metrics in San Diego, we saw the median home price drop slightly in June to $837,275. That's down for the second month in a row from the peak back in April. We are still up 11.6% over the same time period last year. Market time has gone up slightly to 20 days. The number of new listings up just very slightly to 4245. That's 8% lower than it was last year. Month supply up to 1.5, but down 36% from the same time last year. And the number of sales is also lower at 2,764. So we are experiencing cooling in the market. Let's take a closer look at prices. This graph shows that the San Diego median sale price. We see that in June of 2021, the median price was $750, and we can also see where we are today. Prices have come down just slightly over the last couple of months from their peak back in April, as I shared. Inventory, I've been sharing that we've had record low inventory. We are above 4,000. For the first time since July of last year. And as we approach deeper into the summer months and towards the fall, I anticipate that we're going to get even more inventory on the market. Let's talk about the economy. So headlines in the news do more to terrify than clarify. However, there's a lot of talk about recessions, and most CEOs agree that a recession is likely on the horizon. You know, throughout history, during recessionary periods, interest rates go up at the beginning of a recession, and then they tend to be lowered to stimulate the economy moving forward. Historically, we've seen a repeated uptick in interest rates, followed by lowered interest rates in a recessionary period. This slide shows interest rates throughout history, and the yellow boxes are the recessionary periods, and we can see where interest rates declined over time. This is just another presentation of the similar data showing that in each of these recessions, interest rates dropped to the end of the recession to stimulate the economy. So over the past 5 recessions, mortgage rates have fallen an average of 1.8 percentage points from the peak seen during the recession to the trough. In many cases, they've continued to fall after the fact, and it takes time just for things to adjust, even when the recession is technically over. Let's take a look at the market, what we're actually seeing on a day-to-day basis. So the number of offers received is going down. The number of offers over asking is going down. The number of sales, as I shared with you, is going down. And we've got a slight increase in inventory. So we've seen a pickup in inventory recently, but it's not from a huge increase in new listings, but rather a slowdown in the pace of sales. The month supply measures the inventory of sales relative to this pace of the sales. We have the same inventory, fewer sales, and more months of supply. So what we will see is less competition, fewer bidding wars, and less upward price pressure. And that's what we're seeing on a daily basis here in the San Diego real estate market. Here's a great question. Should I buy a home right now with interest rates high and prices high, even though they tend to be coming down slightly? Is now a good time to make a move? Well, you know, we talked about headlines earlier, and there's so much information out there. Great deceleration, prices decelerate, buying homes at the wrong time. Yeah, so you need the best information to make the best decisions, and that's why I'm here. So decelerating prices don't mean depreciating prices. Like when you're driving down the road and you approach a corner, you're going to slow down. You're not going to stop and start going backwards. So we can expect to see decelerating home prices, not depreciating home prices going forward. Well, another thing to consider is uh, the millennial generation is the largest home buying group at present, and they're just starting to move into this market. So they're going to help fuel some of the demand for housing going forward. This slide shows the number of single-family units completed. So we haven't been building to keep up with the pace of demand throughout time, and it's going to be a while before that catches up. And then finally, the big decision is it's been proven that appreciation of homes is always improving over time. The general trend is always upward. And this slide shows that we expect to finish up this year in positive territory, and then expect to see continued appreciation in the years forward, just not at the crazy rates that we saw in the last couple of years. I love this slide. The root issue of what drives home prices is almost always supply and demands. Interest rates affect that. When interest rates go up, guess what? Fewer buyers. Demand goes down, and thus prices are going to soften or not be as cray-cray as they have been. And that's what we're seeing right now. And that is exactly what we're seeing right now in the market. As always, I want to be your resource for everything real estate related. If there's anything I can do for you, let me know. Pick up the phone, give me a call. Also, if you're watching this on YouTube and you like the video, please smash that like button. I really appreciate it. Until next month, wishing you all the best.